It's time now for a look at the day's business news with Brian Quinn. Good morning, Brian.
Hi, Delano.
Now, you're starting out with the fallout over in Saudi Arabia in relation to the disappearance of Saudi journalist Jamal Khashoggi.
That's right. A number of major participants in an upcoming Saudi investment conference that dubbed Davos in the desert have been pulling out left and right. This in the wake of accusations that the Saudi government abducted and murdered Khashoggi at the Saudi consulate in Istanbul on October 2nd. Well, some high-profile names, including U.S. Treasury Secretary Steve Mnuchin and IMF Chief Christine Lagarde, have said they're still going, but the economic fallout is spreading to the Saudi stock market, and it could be just getting started, as Catherine Viet reports.
More fallout for Riyadh over the disappearance of journalist Jamal Khashoggi. Attendees of Saudi Arabia's flagship investor conference known as Davos in the desert are pulling out in droves. JP Morgan Chase CEO Jamie Dimon has become the latest to say no. He joins a growing list of high-profile business people and companies that include Uber, Viacom, and AOL, who've canceled over concerns about the missing reporter. All the uncertainty has caused investors to take flight too. Over the weekend, the Saudi stock market plunged 7%, wiping out their gains for 2018 before clawing back to close at 3.5%.
Something this big would definitely spook investors. And, Saudi just opened up for foreign direct investment. So that was big. And investors do not feel solid in Saudi yet. So it's easy for them to take back their funds.
Investors are also afraid of possible U.S. sanctions. Donald Trump has threatened severe punishment if Riyadh is found to be responsible for Khashoggi's disappearance.
Take him at his word. If the Saudis are involved, if Khashoggi was killed or harmed or whatever bad outcome here, he will take action. That has been his strategy. Believe what he says.
Saudi Arabia has hit back, vowing it will retaliate against any sanctions imposed on it over the missing journalist.
Well, one of the Saudis' main weapons in the event of sanctions would be its control of a large part of the world's oil supply. Fears there are driving up prices on oil markets. Brent crude up nearly 1% at $81.41 as we see here. West Texas Intermediate up nearly 1%, right under $72 a barrel. Turning to equities, European shares had a lackluster open Monday as Brexit talks over the weekend failed to yield a breakthrough on competing backstop plans for Northern Ireland. London's FTSE 100 opening just flat, same for the Frankfurt DAX. Paris's CAC 40 down just over 0.1%. Well, over in Asia, Japanese telecoms conglomerate SoftBank lost over 7% in Tokyo on its close ties with Saudi Arabia. The Nikkei closing down nearly 1.9%. The Kospi in Seoul down over 0.75% as Samsung shares fell there. Chinese index is under pressure from ongoing U.S.-China trade disputes. Hong Kong's Hang Seng off around 1.3%. Shanghai Composite off over 1.5%. Earlier, France 24 spoke with Stephen Innes, head of Trading Asia at Awanda, about what could be the new normal for markets in the midst of a trade war.
It seems that this market hasn't forgotten last week's tumult, and we're certainly being a little bit ginger getting back into the saddle, that's for sure. I think there's a few idiosyncratic storylines going on. I think Tokyo's under significant pressure due to the revised budget, which is expected to be tabled later on today. And also, Kuroda was sending out some trial balloons about raising interest rates in Japan. So that sort of, dented sentiment. The rest of the region is still weighted down by this constant overhang of U.S.-China trade tensions. So until that gets resolved, I think we're going to be in this place for some time to come.
Well, finally for business, it's Judgment Day for one-time U.S. retail giant Sears. The company filed for Chapter 11 bankruptcy in New York court early Monday, listing assets of $1 to $10 billion with liabilities in the range of $10 to $50 billion. Reuters reported over the weekend that CEO Eddie Lampert was once again putting his own money into a $500 to $600 million financing package. That with a plan to close 150 stores while keeping another 300 open through the holidays in a last-ditch effort to avoid liquidation. Well, those efforts ultimately not enough to convince creditors to back the revival plan. Sears has been battered for years by e-commerce in a rapidly shifting marketplace. With Monday's filing, tens of thousands of employees in the U.S. now face a very uncertain future. Bit of a sea change in the U.S. retail market there, Delano.
Clearly,
Marker.
the online market changing everything. Brian Quinn, thank you very much for a look at the day's business news.